One of the most critical tools that all small businesses should have in their financial management arsenal is a chart of accounts. It categorizes accounts by type, including expenses, assets, equity, liabilities, and revenue. Hi, I am Nora from SaasAnt. I will be covering the basics of chart of accounts in this video. A chart of accounts is a listing of all the accounts used in a business's accounting system. It provides a systematic way of organizing financial transactions and helps track the flow of money through the business. Each account in the chart of accounts is assigned a unique number, name, and description, which makes it easy to identify, categorize, and report financial information. Stick with me till the end and I will explain step by step. Before you start setting your chart of accounts, you need to understand the importance of it. Here are some of the reasons why it is crucial to have a chart of accounts include. 1. Accurate financial reporting. It provides a clear and organized way of recording all financial transactions. 2. Better decision making. Businesses can identify areas where they can cut costs, increase revenue, or invest in new opportunities. This can positively impact their bottom line. 3. Compliance. It is easier to comply with regulatory requirements and financial reporting standards. 4. Improved communication. The finance team can easily communicate financial information to other departments, enabling them to make better informed decisions. 5. Audit trail. Businesses can quickly identify and investigate any discrepancies in their financial statements, allowing them to take corrective action before any serious damage is done. A chart of accounts typically includes a list of accounts and subcategories along with their numerical codes. Each account is assigned a unique code that allows for easy identification and tracking of financial transactions. The accounts in a chart of accounts can be classified into 5 categories. 1. Assets. These are resources owned by a business or organization. Examples include cash, accounts receivable, inventory, and property. 2. Liabilities. This category includes accounts that represent the debts or obligations of a business or organization. Examples include accounts payable, loans, and taxes owed. 3. Equity. This includes accounts that represent the residual value of a business or organization after all liabilities are paid off. Examples include owner's equity, retained earnings, and contributed capital. 4. Revenue. It represents the income earned by a business or organization. Examples include sales revenue, service revenue, and interest income. 5. Expenses. They are accounts that represent the costs incurred by a business or organization to generate revenue. Examples include rent, utilities, salaries, and advertising expenses. Here is an example of a chart of accounts for a small retail business. Let's take for an example, a chart of accounts for a restaurant may include accounts specific to the industry, such as food and beverage costs and labor costs. Some common accounts in a restaurant chart of accounts include 1. Sales and revenue accounts may include food and beverage sales, catering sales, bar sales, gift card sales. 2. Cost of goods sold accounts may include food costs, beverage costs, cost of paper products, cost of disposables. 3. Operating expense accounts may include labor costs, rent expense, utilities marketing, and advertising expenses. 4. Other accounts may include tips payable, depreciation expense, bank charges. These are just a few examples of the accounts that could be included in a restaurant's chart of accounts. The specific accounts and subcategories will vary depending on the restaurant's size, type, and specific needs. Creating a chart of accounts is an essential step in setting up your accounting system. It allows you to organize your financial transactions. Here are the steps involved in creating a chart of accounts or adding an account to it in QuickBooks Online. Step 1. Log into QuickBooks Online and select the gear icon on the top right corner. Step 2. Select Chart of Accounts under the Your Company section. Step 3. Click the New button in the top right corner. Step 4. Select the account type from the drop-down list, such as bank, credit card, expense, or income. Step 5. Fill in the required information, such as account name and number, and click Save and Close or Save and New to add another account. A chart of accounts is an essential tool in bookkeeping, and it helps a business record its financial transactions accurately. It is important to have a thorough understanding of the terms and concepts involved in a chart of accounts, debits, and credits. To learn more about bookkeeping or debits and credits, you can check out my video on basics of bookkeeping. I will leave the description below. In conclusion, managing a chart of accounts in QuickBooks is an essential task for small businesses to ensure accurate financial tracking and reporting. By properly setting up and maintaining a chart of accounts, businesses can gain valuable insights into their financial health and make informed decisions to drive growth and success. In addition to accounting software like QuickBooks, small businesses can also benefit from using complementary tools such as SaasAnt Pay Tracker, an automated synchronization software that integrates with QuickBooks and allows businesses to track and manage their invoices' expenses. Now you know the basics of the chart of accounts. However, there is more to learn, and we got that covered for you. I will drop a link for an extensive guide for you to learn more about chart of accounts. Until next time, happy accounting!